Welcome back to another weekly market and financial update. So, there's a lot to talk about this week. The election is just days away, and the media is going to have a field day with all of the news surrounding the election. Some investors are particularly worried about the outcome of the election, and you're definitely right that elections tend to cause market volatility. We've talked about this the last few weeks, right? Leading up to uncertainty with the markets, especially around an outcome that we don't know what will happen because, again, these factors are somewhat out of our control. Markets really don't like uncertainty, and there tends to be heightened volatility in markets during those times. But just knowing long term that elections actually have a very small impact on the markets overall. Now, the policies that a president may enact may have some impacts on the markets, but historically, the outcome of the election initially really has a minimal impact on the actual market. Now, the VIX, which is a indicator or benchmark that a lot of analysts use and investors use about reading volatility, it's just a volatility measurement. So when the VIX is up, it means there's high volatility. And when the VIX is down or low, it means there's low volatility. Historically, the VIX will actually spike in the days leading up to the election. And you can actually look, we actually did a weekly, or I should say a quarterly market outlook earlier in the fall. And we showed this chart of the VIX having a higher historical spike right up before the election during election years, but then it immediately tapers off after the election once the outcome is certain. So just a little tidbit in history on elections and how they work, because I know there is some angst and anxiety leading up to the elections, and it's just good to know that elections tend to be very short term when it actually comes to market volatility and the impact it has on our investment portfolios. Now, there are some issues that do need to be addressed from whoever the president-elect is. There are still high geopolitical tensions. We know the Middle East has been the most recent outbreak of news, but the war with Ukraine and Russia has now lasted for north of 2 years, and Korea has actually sent troops to Russia to help bolster their efforts in the invasion of Ukraine. And it's really been a mess, right? And it's causing impacts on global supply, global trade. We've seen impacts to oil prices in the Middle East, and we just never know what other countries are going to do and how the current sitting president will handle some of these issues, whether they have the ability to handle them and sort of keep some of these issues at bay, or if they don't have the ability or just simply cannot because it's out of their control at that point, the decisions of other leaders in the world and the decisions they make, which can cause issues to the market. So that will be something that we'll definitely keep an eye on, especially as we find out in a couple of weeks who the new president is going to be. There's also another glaring issue around the federal deficit. Now, the federal deficit is massive, and it is a number in the trillions of dollars that I personally can't even wrap my head around. And unfortunately, with politicians, most of the time is that they tend to not deal with issues unless it's glaring right in their face, right? Politicians tend to deal with the issues that are somewhat immediate, sort of to try to put out the fire. These types of issues in recent history really come down to the laws around immigration. We've seen a lot of conversations around things like religion and abortion, right? These are the types of issues that politicians tend to normally gravitate toward because there's just a lot more media coverage on this, and there really is not a lot of media coverage on the federal deficit. But as that number continues to rise, it's going to just cause more market volatility. And I don't know if it'll happen with this presidential cycle or a presidential cycle in the future, but at some point it is going to have to be addressed because the deficit will just become so enormous and to such a balloon size that the government will have a hard time just maintaining just their basic interest payments on the loans that they carry. Now, the good news is that U.S. Treasuries are still being heavily bought from domestic investors and global investors. So U.S. Treasuries are still in very, very high demand just because the yields are so much more competitive than any other form of federal debt that's available in the marketplace. And when I say federal debt, I just mean any debt that's issued by a government, right? So think of, we have U.S. Treasuries, there are German Treasuries, Japanese Treasuries, right? The list goes on with all the available countries that offer them. But right now, the U.S. is still sitting at the top of the market when it comes to federal debt securities for folks to buy. So this gives us some reassurance that, and really from a politician's perspective, if politicians say, well, yeah, we have this debt, but people are still buying buying our debt, then it's not really a big deal. And in the moment, they're right. It isn't a big deal. But long term, it will have impact, and it will just increase the risk that we experience volatility throughout the markets. And again, of course, that ultimately affects our investment portfolio. So these are just some things to consider. Whoever the presidential elect is at this point, they will have some decisions that they'll need to make, which could have an impact on the markets and thus have an impact on our portfolio. So that's all I really wanted to bring up. Again, it's not really something that we should necessarily worry about, or we should be running to our financial planners and giving them a call and asking them to make a change immediately, right? It's just something to be conscious of, that when we're looking at portfolios, just make sure that your investments are aligned with the level of risk that you're comfortable. I always go by the rule of thumb that if you can sleep soundly on your pillow at night, knowing that your investments are at a level of risk you can sleep comfortably with, then you're in a good position. And if you're up at night because you're worried about your investments or it's causing you stress and anxiety, well, then you should definitely call your financial planner and speak to them about reallocating your portfolio. So in other news, Google came out with their earnings and Google smashed it once again. The Magnificent Seven is really looking tremendously well. The remaining two that we're still waiting on are Meta and Microsoft, which should actually be released after hours today. So once we have, which is October 30th, 2024. So once we have those figures, the Magnificent Seven still should continue to shine. I would be surprised if the Magnificent Seven all didn't meet their analyst expectations or actually do better than their expectations. So again, this is just a really good sign that corporate profits in the US still look really, really good. The Magnificent Seven has been strong for a very long time. We have been in a very tech-heavy driven market, and even the rest of the S&P 500, the other 493 companies, they've really come to life over the last 12 months or so, which is a really awesome sign to see, especially when we know that the economy is cooling off. There have been news that the economy is slowing down. And again, this is what the Fed had always been striving to do. They really wanted to slow down the economy to get inflation back under control. So all eyes now are going to turn to Friday's job report, which is November 1st. If you can believe it, I can't believe 2024 is almost over myself, but Friday will be a big indicator of how the economy is moving, because we'll see the jobs report and see where the labor market really stands, especially now that the Fed has done their first set of rate cuts and the economy actually now has had a little bit of time to feel those effects. So we'll keep an eye out for Friday. I know we had a lot to talk about today because the election's coming up, and it's always really big news around the election, right? A lot of people are tuning into the media, and we always get lots of questions around the election. Politics aside, we always get asked questions. What's going to happen if Harris is elected? And what's going to happen if Trump is elected? And what are some of their indications toward policies that they might enact? And how will they handle the economy based off of the situation it's given to them once they are given power? So thank you so much for tuning in this week. I know we'll have a lot more to talk about as the election unfolds, but I really appreciate everyone for watching. I hope everyone has a wonderful, healthy, safe Halloween holiday, and I look forward to seeing everyone next week. Thanks again. Take care.